Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point in time. And we are looking at some amount of weakness for the Hang Seng, not as much for the Shanghai. And of course, these are the two markets which are open right now. And well, we've had some sort of an implication for the SGX Nifty at this point because it is indicating, well, a lower rating as far as the movement is concerned. So down by around 0.3%. And we're going to have to continue to keep track of that. But what does it mean for the futures and options space on the final trading day of this year as well as this decade? Let's get in Navneet Saluja D'Souza, who's standing by to give us an update on the futures and options space. Navneet, good morning.
Good morning, and thanks for that. Yesterday, we defended the 12,200 mark, so I think that remains key even in today's trading session. In fact, there was buying which came on dips as well. We did approach the mark of 12,200, and the index closed at least 40 points off the day's low. So as you can see, there was more of profit booking seen because we also came off from those levels of 12,300, closer to that at least. Premium on the Nifty futures is maintained at levels of about 70 points, and unwinding was seen even for the Bank Nifty futures. So across the board, you did see profit booking coming in at higher levels. For Bank Nifty, which saw open interest addition of almost 25% on Friday. Yesterday, it shared about 10%, and the premium continues to be on the higher side of almost 200 points. India Volatility Index bounced back from its support levels of 10 to 11, which it had reached. Remember, it is still trading at almost 7-month low. So that bounced back. It was up about 4.5%. And Nifty PCR came off a bit. So that stood at about 1.39 versus the previous close of about 1.45. That was on account of more call writing, which came back into the system in yesterday's trade. So in terms of distribution for this Thursday's expiry, maximum open interest on the call side is at the 12,300, and on the put side, it is at the 12,200. So that's the very, very narrow range we're looking at, 12,200 to about 12,300. In case if we breach the mark of 12,200, do watch out for the 20 DMA, which is placed somewhere about 12,100. Very quickly then, in terms of what happened in yesterday's trade, of course, as I mentioned, there was more of call writing. As you can see, out of the money strikes, 12,300 and 12,400 calls added open interest, while on the put side, lower level strikes like 12,000 and 12,100 put strikes added open interest in trade. Talking about the stock futures, there were a lot of individual stocks actually which moved around. Fresh long positions were seen for Bhatia. Remember, this also witnessed cash-based buying. Metal stocks bounced back in the last one out of trade. Jindal Steel and Power on the future side witnessed a long position. Cummins was your top F&O loser in terms of stock, so that witnessed short positions, and NCC, which was up 4% in trade, saw short covering on the futures side. FI data, of course, the volumes are quite thin. If you look at the gross numbers on the cash side, have also declined, so they unwound their long positions. Nearly 5,000 contracts were unwound, whereas if you look at the index options data, they've created more of short positions. So put long, almost 10,500 contracts were added, and also on the call short side, they added nearly 3,000 contracts. With that, it's back to you guys.
Well, thanks a lot for that, Navneet. So that's as far as the F&O activity goes. And I think what Navneet was mentioning about, a couple of names out there, take examples of JSPL and the kind of move that it has had despite the news flow not being the most positive. Or if you look at yesterday's session, the kind of moves that an Eicher Motors, Ashok Leyland and the likes had. I mean, the auto names are buzzing. And I think the key out here is, and let's pose that question to Mayuresh Joshi, he's head of equity research at William O'Neill, joins us on the show. Mayuresh, the key out here is that a lot of people wait for the print to become better before they buy, which is not a bad ploy, but a lot of times you don't get the stocks at the valuations that they were at the nadir when the print was not that great. We're seeing that in metals, we're seeing that in autos now. What's the outlook ahead for these two pockets?
So morning, Neeraj. Morning, Argam. So first of all, a happy new year. I think it's just around the corner. So
Yes.
to all of you, to all the viewers as well. So
Thank
hope 2020 is extremely fruitful in terms of the broader market returns, because that is what was disappointed. So coming specifically to your question for autos and metals, yes, I think a lot of people did miss out the exuberance and the rally that the stock prices exhibited, specifically for the auto sector as a whole. But what the print suggests even now, I think the wholesale numbers and the retail numbers, I think the softness still continues. I think trigger points are still there for the sector as a whole. So I think the scrappage policy, for example, so a lot of commercial vehicle players will actually get impacted positively if the policy is announced. But the contours of the policy is still a large unknown at this point of time. How are the details going to get penned out is going to be extremely critical, both from a volume and a price perspective. So yes, I think you might miss out on that initial move, as I've always maintained, whether that move is 10, 15, 20 odd percent. But again, I think if the sector has the fundamentals attached to that, and the earnings are going to show stability in terms of robustness, both in terms of the leverage that can get created. Because for the sector as a whole, I think apart from volumes, demand coming back, which is a clear indication, which will prop up volumes in a sustained organic fashion, along with the discounting factor going on. Because as soon as demand comes back, I think the pricing power comes back to the auto guys. So I think the sustained earnings move, even if you lose out that 15-20%, I think you're probably talking about returns over a longer period of time. So I think those compounded returns can still come through. So I think that lost out or the feeling of missed out feeling that a lot of investors have, if the sector dynamics are going to show strong elements of earnings recovery.
But would you wait for that, Mayuresh, or would you put some money to work? And if so, within what pocket? I mean, we've discussed this ad nauseum, but just because the sector starts moving up, it pays to probably talk about it again. What within this auto pack would you be comfortable putting in fresh money to work then?
So again, I think if you probably look at the leaders within this space itself is something that you should still look out for. So for example, I think Maruti, right, what they have exhibited in terms of price and what they are exhibiting in terms of the expectations that the stock can deliver. I think this is one stock which can maintain its leadership position in spite of competition, in spite of the slowdown that we've witnessed. So if the numbers start trickling in a relatively better fashion, I think Maruti is better placed. Within two-wheelers, again, I think Bajaj Auto is relatively insulated from the kind of pressures that we probably see, both from the domestic slowdown, from the discounting factor, because they've got a large part which still comes from the export market, and that is pretty much holding up for them. Again, in terms of the product variants that they've got, two-wheelers largely remain less affected in terms of the BS6 transition because the cost push is not as evident as the four-wheelers are. So Bajaj Auto might be interesting to look at. And a few auto anchors like we've discussed, right? So battery makers, interestingly, I think, whether they get affected in terms of how the slowdown pressures will play out, yes, I think because the OEMs are dragging them down. Again, I think in terms of the electric two-wheelers, three-wheelers, there is going to be a loss because there is no auxiliary backup battery that these players require. So there might be a potential 12-15% loss. How do you play that, I think? Is it going to take time? I think you should still wait it out. So for the auto anchor, I think you should be far more selective at this point of time. Minda is something that I've liked in the past. It is far more diversified in terms of their product suite and what they can deliver as the numbers start improving over the next few quarters. And I've always maintained this. I think the second half is going to be very, very interesting for the auto sector and the numbers will start improving. So I think stick with the leaders, I think, whether it's the autos or the auto anchors.
Okay, hold that thought, Mayuresh. We'll be back, but let's start by addressing about a few stocks which have been in news today, as well as perhaps a brokerage call that we have in today's day of trade on an entire sector. We have a research team here with us. Good morning, guys. Nikki, as usual, what do you have on your list this morning?
Not many stocks. I'll begin with Chalet Hotels, where the company has entered into 5 new agreements with Marriott International for 1,500 plus keys in luxuries as well as upper circle hotel tiers. Now remember that the stock is in traction for the last 3 trading session, and also some time back the stock rallied 5.5% to 6% for that matter when it signed an agreement with Hyatt. So that is one bit of development, and there are a couple of developments which have been taking place for the company at large. PTC India Financial Services, a bit of positive coming in for this NBFC. The company has rather received fresh sanction of fresh loan long-term loan for around 500 crore from Bank of India for a period of 10 years. The funds are for lending to infra projects and other operational requirements that the company may so have. And last on the list, we are looking at Dish TV, where there is a negative development coming in, given that the promoter has offloaded some stake. 2.47 crore shares have been offloaded, and on the buyer side, you have a JSGG Infra Developers, which have bought in this particular stake in the counter.
All right, and we have Kotak Securities note on the banking sector. Shefali, what's the update?
Well, yes, they've studied the asset quality trends for the first half of this fiscal year, and as per their study, the asset quality has worsened marginally in the first half, mostly led by loans outside of the large corporate segment. And according to them, the earnings recovery is gradually underway and could accelerate going forward as the credit costs decline sharply for most of the banks. And they're saying that the recent increase in the recent downgrades is a lagging indicator. So probably we could see a bit of that coming in the next few quarters. They're positive on banks with higher corporate NPLs as the earnings recovery has just begun. So the resolution processes are already happening, and according to Kotak, the earnings recovery will also aid the corporate side book of the banks. So going forward, they're positive on SBI and ICICI Bank, and these would be the key beneficiaries of the improvement in the macro environment and also the resolution processes that we have been witnessing.
All right, thanks guys for joining us and getting us those updates on this morning. But Mayuresh, I'm going to take up the banking sector with you, specifically perhaps something to do with Yes Bank and RBL Bank. Now, a lot of investors out there will say, you know, all the bigger banks have already moved quite substantially. What is the scope of any bottom fishing whatsoever when it comes to, well, banks like RBL Bank or Yes Bank for that matter?
So I think it was a very interesting stack up that we had done specifically for these mid-cap private banks, and we stacked them up against their loan growth, their asset quality issues, and the expectations on how the recovery will happen on both these parameters going forward. So if I stack up RBL, Karur Vysya Bank, City Union Bank, and to a certain extent Tossin Federal Bank as well, I think to a large extent Federal Bank has been able to witness or withstand the kind of slowdown, at least in terms of the exhibited NIMs. So the reported NIMs of 3 odd. Whereas I think the asset quality pressures for a few have actually deteriorated. So when you talk about a Karur Vysya, for example, or when you're probably talking about something like even an RBL Bank, I think the gross NPAs and the net NPAs and the slippages that have come through and are still expected to play some part in terms of reported numbers will always result in elevated provisioning that will still carry on their balance sheets. Now you stack that up against the valuations that they are deriving at this point of time. So the expectation in terms of a classical spin-off for earnings versus the kind of asset quality pressure stroke provisioning that is required. Yeah. In our opinion, I think if you stack up all these, I think to a certain extent City Union Bank is something that I've liked over the past few months. Right. I still believe that the stock can do well. Yes, there are concerns for the pocket as a whole because the exposure to MSMEs, SMEs still relatively remains high, and that's the entire logic behind the elevated NIMs that they report. 3.3, 3.8, 4% to a certain extent. Right. So they do carry that risk, but a certain element of that risk had got recognized. There still will be some issues over the next 2 quarters, sure. But it should start playing out quite effectively after that. So I think City Union Bank, Federal Bank, probably within this stack looks relevant.
All right.
Okay. Do watch out for those names as well. Mayuresh, the other big talking point, of course, this morning has been the subscriber addition data that has come out for the month of October. 2 or 3 points, and I don't know which one to your mind look the most optimistic. One, the fact that Jio has added the most subscribers despite the price hikes, but Airtel showing positive subscriber addition for the first time, and Vodafone losing less. And despite that, if Airtel and Bhatia have added, which means that the subscriber addition numbers would have grown at large. Airtel has been a rock of a stock in the sense that it's being bought at every dip. What's your outlook here on these names? Would you be a buyer for 2020 into a Reliance or a Bharti Airtel?
So I think Airtel has, as you rightly said, been resilient and has moved significantly, right? So for all the issues at hand, the AGR related issues, the elevated debt on their balance sheet, what happens in terms of the payout that is required to take care of this liability, the ability to raise funds, how the African operations are stacking up, the prepaid or the tariff hikes that they have taken. So the ARPUs that they reported at 128, specifically in the case of Airtel, I think with the hikes that they are taking and the aspirations that they have got to get to that 300 mark, I think it's far-fetched at this point of time. But if you realistically think about 180, 200 over the next few quarters, and let's assume that the market share that now probably remains within these 3 players. So I think with every player probably taking a hike, I think the churn is going to be far lesser than what you probably witnessed in the the past.
Sure.
So the SMS or the subscriber addition market share probably remains around the same levels for all these players. The revenue market share, in fact, started going up because of the hikes that they have taken. Now, relatively, I think how they're able to deleverage their balance sheet, which obviously will take place over the next few quarters as cash flows start improving, will result in better net debt to EBITDA levels. Now, within the stack itself, Jio expected to raise money, Airtel expected to raise money. Vodafone Idea probably remains in a weak spot at this point of time. Sure. And though net debt to EBITDA levels will come down from those elevated 18-20 times, I think Airtel still remains relatively better placed on all these dynamics. Again, the 4G subscriber base is extremely critical because Vodafone Idea has a huge 2G subscriber base. So I think the kind of capex and opex that will still be required to transition these customers to 4G will still entail a lot of cash flow deterioration for Vodafone Idea. Bharti Airtel is getting there, but I think relatively better placed. Jio, obviously, I think is the best place within this group itself. So I think stacking up, I think Airtel, if somebody is holding on, which I've always maintained, I think should continue holding on. If Jio is successfully able to deleverage his balance sheet, and if there is any element of news in terms of a listing for the Jio vertical standalone, I think it probably also remains better placed because the ARPUs will increase, and with deleveraging, I think the cash flows will ensure that there is significant amount of OPEX that they need to entail and not a significant amount of CAPEX because of the 4G fiber layout that they've already done. So I think, yeah, Airtel should clearly be held on if investors are holding on.
Okay, well, and of course, Airtel has done quite substantially well for the year of 2019 as well, specifically. Well, okay, it's up 45%, but specifically in the last 6-7 odd months, it's just been on a tear, clearly outperforming the indices, the Nifty at least, which is advanced by around 12-13% for the year. But on that note, let's get in our technical experts for the day. We have Brijesh Bhatia, research head at Dealmoney Securities, and Amit Harchekar, director at Index Genius Investments Advisors, who's joining us on the show. Good morning to both of you. Thanks for taking the time out. Brijesh, I'll start with you. Where do we go from here when it comes to the benchmarks?
Good morning, Agam. I think I would slightly change my stance from bullish to bearish now for a short-term point of view, because if you look at the broad-based, we are witnessing, in fact, Nifty 50 or even Bank Nifty large caps, the RSI negative divergence in many of these stocks. So I would stick with the Bank Nifty first on the short side, because Bank Nifty has completed the bearish harmonics on monthly charts. Even if I look at the monthly or weekly charts or even daily charts, we are witnessing triple negative divergence on all the time frame. So which is we have seen very rare all the 3 time frames turning out to be a triple negative divergence. Plus, if I just look at the data since 2018, and every time the index has deviated more than 10 or 11% from its 200 days average, we have seen a pullback rally to test of around 200 days average again. So currently we are around 11.5% away from its 200 days average on the index. So I think I'm expecting a good slight correction of around 3 to 5% in coming couple of months, and probably from the mid of Feb we might again see a positive rate. Till mid of Feb I'm expecting a bearish momentum on the markets, and I think Bank Nifty is poised for a good downside, and one can look for a Jan futures short at around 32,552, which was yesterday's close, and look for a momentum target of around 31,840. And overall, I think Jan or by mid of Feb, I'm expecting index back to around 30,500 on the downside. And the momentum stop loss one can place is above yesterday's high, which was around 32,816.
Okay, fair enough. That's Brijesh's view on the indices. Amit, good morning to you as well. How are you placed on the benchmark indices?
Good morning, Agam, and wish you a happy new year. Well, we think this market is still oscillating into a broadening ascending wedge, and right now the market is trading at that resistance point of the ascending wedge, which is around 12,250, 12,300. We think based on derivatives data, the current series VWAP for Nifty futures, that stands at around 11,261. So we would suggest opening up short positions below 11,250 for so that you can get a momentum on your short positions. Right now the total open interest on the Nifty future stands around 1.2 crores, which is comparatively less. So we are expecting the moment Nifty future starts trading below 11,260, you will see fresh build-up of short positions in this market. We think the major risk for the market should come from weakening rupee. Already there is a very strong breakout seen in Euro INR as well as GBP INR. The moment we see a follow-up weakness in rupee against USD which is about 71.65, we are expecting a rally of around 5 to 6% in USD So that should trigger the fall what we are looking for. So as I said, we would be quite cautious, but as I said, I would be opening short positions in Nifty futures only once it starts trading below 11,250.
Okay, hold that thought, guys. We'll just be back, but onto our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up, and we take a look at what he has today. Yash, good morning. What's on your radar?
Morning, Agam, and this is the last Bloomberg Edge of the year, and it's a buy signal coming in from the proprietary indicator, which is the trender indicator, and the stock that we are looking at is Marico. Now, as we always do, let's first try and understand what the trender indicator is and how do you interpret it. The trender, as you know, uses the average true range for the purpose of calculation. It generates a buy or a sell signal and also helps you manage your stop loss. How do you interpret it? You go long when the trender line changes its color from red to green, and you go short when it changes its color from green to red. When does that happen? Whenever the price moves beyond a certain level, which is the level of the trender line. In the case of Marico, and what we've seen on the daily time frame chart over here, is that it has managed to creep above the mark of trender. So the red line is where the trender indicator was at 342. Its high of Friday was exactly at that point, but it did not manage to close above that mark. Is the reason why we didn't see that color change happen on Friday. But yesterday's day of trade was extremely positive, and it managed to close above that mark. In fact, it is slightly higher than that, and with it, it has managed to cross above it and give that positive crossover. But that is as far as the action is concerned on the daily time frame. On the weekly time frame as well, we are seeing some positive reversal indications. So take a look at how the stock is placed on the weekly time frame, and at the mark of 330, there is a strong support for the counter. So at current levels, the risk to reward ratio for going long is extremely favorable. The RSI 2 has almost bottomed out around the mark of 30 and has given the positive divergence. So at this current juncture, the risk to reward ratio for going long is extremely favorable. Obviously, the view will get negated if it moves below or closes below on the weekly time frame below the mark of 330.
And what is the historical testing showing us, Yash?
Agam, 3 out of the last 5 times that the trender has given a positive call. On an average over the next 1 month period, on a closing basis, the stock has managed to give returns of close to around 6%.
All right, Yash, thanks so much for joining us and taking us through the last Bloomberg Edge of this year and this decade. But I'm going to go back to our technical experts and take their stock picks too. Amit, a happy new year to you as well. Stocks on your radar?
Well, I have a one buy and one sell. I would recommend buying Coal India futures. Here the rationale is the stock has gone through a good accumulation. If you see on a long-term basis, the stock has formed a triple bottom. So even if we assume a bear market rally in this counter, we expect the stock to retest levels of 230, which turns out to be a level closer to 200 DMA. Right now, we are suggesting a stop loss of 195 on a future on closing basis. We think the short-term target could be placed at 216. Our second pick would be going short on Reliance Industries futures. Here the rationale is, if you see from a long-term perspective, the Reliance Industries GDR has confirmed a trend reversal on the long-term basis after testing the upper band of the rising channel. We think now the stock is poised to retest the support of around 450 in next few days. So here the stop loss we would recommend would be 1600 on the closing basis for the future side, and we would review our stance once it tests the levels of 1450.
Okay, and Brijesh, what about you? I believe one of your calls is a sell on Kotak Mahindra Bank.
Yeah, so I would, with the Bank Nifty, I think Kotak stands out to be a very good short position trade for a couple of reasons. First, if I look at the momentum above 700, it seems out to be a tiring momentum. Second, if I just look at the daily chart, it has formed the bearish falling 3 on the candlestick pattern. And third, if I look at the short-term chart on hourly, it has formed the bearish head and shoulder. So I think it's a good short at around 1698 on the futures, Jan futures. Look for a target of around 1633 on the downside, and stop loss can be placed at around 1740. My second bet is on Petronet, again short bet. We'll look at the structure. It was consolidating between around 272 to 284 on the upside, and it has given a breakdown in yesterday's session below the triangle formation. And even if you look at the momentum volumes, volumes and slow and steady increase in yesterday's session. So So I think with the momentum-based volume rising, even oscillators are trending, indicating the negative momentum is on strong. So one can look for Jan future short at around 271.25. Look for the target of around 255 on the downside, and stop loss can be placed slightly above the triangle. It's around 278.80.
Okay, we'll watch out for some of those names as trading ideas too. But mind you, as you were saying yesterday, that some of the auto names did reasonably well for themselves. The top two gainers were Tata Motors and Eicher Motors in trade yesterday, and they were followed closely by Mahindra and Mahindra a bit lower down. So that's that one pocket. The other stock that has done remarkably well is JSPL. Now we saw, or we heard Navneet also say that there are some long positions being formed there. Fundamentally, Mayuresh, this is digesting all the bad news and still moving up. Is it because the valuations are very comforting and the steel cycle may turn and therefore people are betting on that? And therefore, would you do the same? Would you bet on a JSPL?
Yeah, so I think both the factors are working in favor of JSPL at this point of time. So I think the kind of utilization that they really expect in terms of the facilities, specifically the domestic ones, should really abet and start helping out their overall earnings. And with the expectations of steel prices expected to firm up, because HRC prices are around $550 in dollar terms, and they are expected to move higher over the next few quarters. So that is a huge support as utilization moves higher and prices move higher, creating a natural leverage, improving cash flows, and the expectations of the company deleveraging their balance sheet by selling off a few non-core assets and the listing of their Oman subsidiary as well. The second element is in relation to the news flow as well. So I think the news flow will have an impact in terms of the stock as and when it comes. To a certain extent, the markets are ignoring the fact that something will move in favor of the company on both these factors. Has the cycle changed for the better? At least the data points at this point of time do not suggest that prices have firmed up significantly higher. Demand still remains muted, but the entire resolution of the US-China trade deal talk and expectations of further easing off will push up LME prices, which is a benchmark for steel pricing in general. So I think a few factors working in favor of that company. Whether we are buying into the stock at this point of time, we will wait and watch, Neeraj.
Okay. There's another set of stocks that I also want Mayuresh to come on in fundamentally, but just Brijesh, technically though, Manappuram and Muthoot Finance and the kind of moves that they've had, can they extend those gains?
Yeah, definitely. If you look at the Manappuram, if you look at the correlation with gold, where we have seen that gold is strongly moving above 1500 now, and we have seen a good momentum rally from around 1350 to 1500. And if I just compare with the gold momentum on the Manappuram, it's been very much correlation is very strong. So I am expecting gold to rally towards 1600, and Manappuram will also see a good upside momentum towards 210, 215. Coming on to the Muthoot Finance, I think yes, 190, 195 could be on cards for Muthoot Finance. 790 or 800 could be on cards for the momentum on the Muthoot Finance. And if I look at the structure, slow and steady profit bookings are witnessed in Muthoot Finance with the volumes, which were around 560, 570, which have seen a good upside accumulation volumes, are now showing signs of slight profit booking. So I'm not expecting more around 800 levels. Could be a good upside resistance for Muthoot Finance.
Okay. Now, what is a natural benefit to these companies is the rising price of gold, right? And as the dollar is slipping, there's a bit of a technical trigger to the global gold prices as well. But gold is, well, crossed 1500, and it is the biggest gain that we've had for gold since 2010. And that's quite a telling statistic, isn't it? That gold prices are northwards of 1500 and is the best gain that we've had since 2010. Mayuresh, fundamentally, how does that augur for these gold loan companies?
So yeah, that element is taken into account for these gold finance companies. The other element obviously is that during the entire NBFC crisis, and even now, I think the kind of leverage that these guys get compared to the other players within the NBFC space itself, I think that safeguards them. So if you look at their buckets in terms of 3 months, 6 months, 9 months, even a year, they're very, very comfortably placed in terms of cash flows. Even in terms of the LTV, and with gold prices increasing, and to a certain extent, how these guys probably are still carrying on their business in terms of diversification. So I think a lot of efforts are going on in terms of the non-gold diversification as well, where the UM built up has been quite substantial. Asset quality prices have inched up a tad bit higher for the non-gold business. But generally, I think the elements in terms of earnings should hold up for these companies. So I was always optimistic on these companies, even during the NBFC crisis. We had held them onto our portfolios. We still continue holding them on. So I think, yes, we still continue to hold on to the stocks within our portfolios, Manappuram still lies in our portfolios.
Mayuresh, your favorite IPO in the year of 2019?
That's a tough one. I can say that.
I'm sure there are quite a few out there. There's the likes of IRCTC, there's Affle, there's IndiaMart, there is, I reckon these are the top of my mind. Anything that stands out for you?
So Affle and IRCTC, I think, made tons of money for investors.
It's Polycab.
There's Polycab as well,
yes.
exactly. I think, so if you probably stack them up, I think what Affle, IRCTC, what Polycab did, I think give phenomenal returns. But they were the only exceptions probably to the entire IPO listings within, within the entire pack. So to a certain extent, yes, I think the dynamics that all these stocks have, they've got niche offerings within the individual segments that they cater to. Polycab, again, I think there is sufficient competition going in, but the numbers that they exhibited, I think, were phenomenal even in the quarter gone by. So when you're talking about FMCG, I think they talk about FMEG, right? So the FMEG segment, though very, very small, is showing significant signs of traction. IRCTC, obviously, again, the Tejas announcement that has happened, I think, Ahmedabad, Bombay, more trains expected to come through, I think does prop up that stock. And Affle, I think the entire digital marketing spend itself is going to quadruple from here. So I think very, very interesting, these stories.
Okay, well, we just have about 10 seconds left to go for pre-open. So, well, of course, the Hang Seng and the Shanghai are exactly where we left off about half an hour ago, but the SGX Nifty is also very much there. Well, down by around 0.3%. For now, the pre-open is suggesting, well, I reckon that we'll have to wait for a minute or two before we start seeing some amount of traction, but it does seem that well, the 0.3% decline for the Nifty may very well stick, but that is not the case for Sensex. So like I said, we're going to have to wait for some more time before we start, seeing some trends. But a pack that did really well yesterday was the auto sector. Tata Motors, Eicher Motors were examples there. In fact, the top gainers yesterday. So let's see how they are doing today. Tata Motors remains unchanged. Eicher Motors also, well, I reckon remains okay. So Eicher Motors is looking at a little bit of a decline for now. There's the likes of Hero MotoCorp, which has started showing some amount of gains of late. That is also looking at a decline for now, at least. We spoke about the metal index and the metal industry as a whole, but I want to address Vedanta because that was also one of the top gainers yesterday, which did advance along with Vedanta's unchanged right now, and Hindalco is the other one which also advanced and perhaps gave some support to the metal index. On the losing end, we did have weakness in the banking indices, specifically ICICI Bank and Yes Bank yesterday. Can we take a look at how they are doing right now? ICICI Bank up around 0.5%, and Yes Bank is largely unchanged. But of course, State Bank of India was the other one from the public sector space, which did decline yesterday, and does seem that there could be some recovery in store. But that's as far as some of your large caps are concerned. Neeraj, how about the broader markets?
Yeah, well, we should give this, as you said, the chance to stabilize for some of these. I wonder, though, if indeed the likes of SL Propack or an Ujjivan Small Finance Bank or a Gujarat Fluorochem, stocks which are knocking at new highs yesterday, what they are doing in the session today, we'll watch out for those. JSPL and Max Financial are amongst the others that you should monitor. And you should also monitor Ashok Leyland and TVS Motors, because those two were in the thick of action in trade yesterday. I think these rates will give them a chance to stabilize before we talk more about them. The currency and the bond yield should come up on your screen, and let's see what they are doing in the session today. If anything, the rupees open at 71.34, so flattish start to the day. 71.27 now, so opening at 71.34 and then cooling off a bit more or strengthening a bit more. So that's the currency. I don't quite know if the bond yields are there up as yet, but bond yields should also be interesting. We've seen the pullback in bond yields from 6.82 to 6.59 and then 6.50. Yesterday and today, yesterday in particular, the yields seem to have hardened just that wee little bit, about 4 basis points. Let's wait and watch what happens. But we'll give these rates a chance to stabilize before we talk more about them. Amit, Harchekar, a pocket that has been on a bit of a rise the last 2 or 3 sessions are these brokerage stocks. So ICICI Securities is leading the ranks, but 2 others which have done reasonably well are Motilal Oswal and MK. Any thoughts on the charts of any of these 3 names in particular?
Well, Motilal is about to give a breakout from an inverted head and shoulder, but that would only happen if the stock managed to sustain above 820 on the higher side. Formation is quite positive, but as I said, on the lower side, I would be watching out for levels of 725 and on the upper side 820. If we are able to break out from this band, I think we should clearly get one side direction.
Okay. The other set of stocks, and Mayuresh Joshi out here has gotten an interesting chart from his team, but since I read some of your reports, Mayuresh, and you do a bit of technical charts combined with the fundamental analysis that you have. And the day before yesterday, we were talking about these back-end manufacturers, right? Dixon was up and active. Hindustan Foods is doing well. Amber is trying to do that too. What is the sense for some of these businesses?
So the businesses will show increased traction. So all these businesses will have the outsourcing component, which will keep on improving with them. And with the cost efficiencies creeping in, the margins that they reported will be on a higher scale going forward. Now, the additional lines that they're putting, Dixon or Amber, for example, and the utilizations of these lines should probably start happening far faster, not with that 20%, 30% typical, but even to the extent of 60, 70%, because the orders in hand are very, very strong. So I think interesting that these players should do well. I think what chart I was probably showing you was something like an Amber Enterprises, because what we've seen and what our studies reflect is that they've got an ascending base pattern. So the three previous highs and the three previous lows, I think they are higher highs and lower lows. So what this is clearly indicating, and the kind of time period that has got spent over the last 6 to 8 months, you're ideally probably looking at consolidation and higher lows, higher highs happening, lower lows, higher highs happening for a 9 to 16 week period, and it's already spent around 14, 15 weeks, and it is not corrected, and it is actually exhibiting signs of a breakout. So I think both fundamentally and technically, as we look at things, I think Amber can actually show a phenomenal move if volumes hold up today.
Well, maybe we can ask Brijesh to come in on this. So Mayuresh has kind of provided a technical backdrop. I don't know, Brijesh, if you agree with this, but a slightly medium-term chart, and you can very well disagree with what Mayuresh was trying to say, by the way. Amber Enterprises.
I think stock is still a bullish trend. I think I'm expecting the stock to rally towards around 1290 on the upside, because if you look at the structure, it has formed a good rounding bottom formation on weekly charts, and every time it has tested the support zone of the rounding bottom, we have seen a good rally of around 12-14%. And if I look at the momentum, it has tested around 980, 919, and if I just look at the momentum, I think 1290 can be on cards for Amber.
Okay, well, I'm going to take another one of those stocks which many may consider one of the stocks of 2019, that's HDFC AMC. Amit, I want to take this one up with you. We've seen HDFC AMC make a high of 3,844, if I'm not wrong. It's currently gone into a consolidation mode over the past few days. How are you placed on this one? Where do you expect the stock to move on in the near term? What is your reading on this?
See, HDFC AMC belongs to a basket of Nifty Next 50, which means you ignore the top 50 stocks and the rest of the stocks within Nifty 100. It forms into that basket. And in fact, if you see, that index has been moving sideways since almost last 7 or 8 months. We think HDFC AMC remains into major potential reversal zone, which is between 3250 to 3300. If we do not break this level in next few trading sessions, I think we could be heading lower towards 3000 or 3100. So I would be watching out levels of 3300 quite closely, at least on a weekly closing basis.
Okay, 3300 weekly closing. A lot of people are now starting to say that maybe they would prefer an RNAM over an HDFC AMC. Remember, the Motilal Oswal also has a bit of an AMC flavor to it. So those are a few names that are linked to the asset management business, and therefore could be interesting ones to monitor. The pre-open rates are settling down, and as the pre-open rates settle down, I don't think we have too many winners or losers for that matter. Yes, the likes of M&M and Tata Motors are up there gaining, but we don't have really big gains on the Nifty, at least in the pre-open session. Not the telcos. I mean, the telcos too are not reacting too much. A quick scan at the Nifty 500 and try and see what could be moving when the markets open. Well, not too much really, just a handful of names. RBL Bank is an interesting one. Mayuresh, they've raised some more money. Do you like the stock at the current prices, or would you prefer some other banks?
No, as we discussed earlier as well, I think I'll still wait out for the numbers to come out because
For
RBL specifically, I think capital raise is a positive sign, but it was also the need of the hour because if they had to continue the kind of loan growth that they have been doing historically, I think capital raise was mandated. The second element also is how much are they going to provide in terms of the bad loans or the asset quality pressures that they're facing. So the PCR or the provisioning is going to move higher, both for RBL and Yes Bank. There is no two ways about it, which obviously takes a dent in terms of their cash flows. The third element obviously is that, as I said, if you stack all these banks, the mid-tier banks together, I think City Union Bank, Federal Bank still probably remain biased in my view. Valuations are still a little bit on the higher side for City Union specifically, but again I think the dynamics should improve. Asset quality pressures have been at the forefront for all these banks, but they should gradually start improving, and the NIM should get maintained around the 3.94% mark, which is itself sufficient, and capital adequacy, specifically Tier 1 for CUB specifically, stays at 15%. I've flagged up the risk as well. I think the risk factor is that they're concentrated significantly out of Tamil Nadu at this point of time, but that is where the entire growth pocket for SMEs, MSMEs probably lie. So they have been very, very cautious over the last few quarters in terms of underwriting. So I think whatever asset quality pressures they'll report, I think it'll be far lesser in terms of annualized slippages going forward as well.
Okay. Well, another stock that I want to address is Tata Motors. It's gained about 57% in the last 3 months. It's been a reasonably good year as well for Tata Motors, specifically if you consider how bad, well, 2018 was. But that said, let's take a technical check here. Amit, if you can come in on Tata Motors. We started to see a little bit of consolidation over the past few days. Where would you bet Tata Motors would move from here on in the near term?
Well, we have expectation of around 225 to 230 in next 3 to 4 months. Our logic is we are expecting GBP INR to cross 105, and in fact, I think that should help Tata Motors crossing 220 levels.
Okay, we'll watch out for Tata Motors in the session as well. By the way, we'll also need to monitor what happens to Airtel on open, so that's the other interesting stock to monitor in the session today, and then we'll watch out for a clutch of mid caps and small caps. But minutes away from market open, let's tell you all that you need to know to stay ahead and trade today. First up, Reliance Jio adds 1.44 crore subscribers, the most in the last 3 years. Bharti Airtel too adds subscribers after 11 months of losing them.
Bloomberg reports that the Hinduja Group may submit an expression of interest of Jet Airways ahead of the January 15 deadline.
Dewan Housing's financial creditors have submitted claims worth 87,000 crore rupees. The RBI appointed administrator has admitted claims worth 81,000 crores.
RBL Bank will raise 675 crore rupees through a preferential allotment of shares to 4 investors.
Chalet Hotels has entered into an agreement with Marriott International for 1,500 plus keys in luxury and upper circuit hotels.
And Kotak Securities says Indian banks have seen a marginal rise in stress led by loans outside the large corporate segment.
Well, okay, let's take the conversation to Chalet Hotels, and the pre-open rate should come up on your screen. They've signed a large agreement, and arguably the stock is very excited with this. Usually you don't see stocks react so much on agreements being signed, but 1,500 rooms, Marriott Hotels, a lot of conversation about how India is still completely exhausted as far as room capacity goes, and new rooms will only add. Do you like what Chalet Hotels is doing? Because now there are different models within the hotel industry, Mayuresh.
Oh, absolutely. So it's something like the hospital model as well, where there's a lot of management that probably goes into that, right? So I think a lot of hotel owners have probably understood that instead of having a heavy capex kind of a model put in, I think it's this model that probably works far better, both in terms of IRRs getting generated and relatively lesser stress in terms of capital employed. So I think the ROCs will also show significant signs of improvement. So yeah, it's a big deal that they've probably done. But what the hotel industry dynamics itself suggests is that utilization levels should actually inch up higher than 70-odd%. So that's a threshold that one normally looks at, because once that starts happening, and as demand starts probably trickling higher, it is the demand season. I think Q3 is one of the strongest quarters for the hotel industry as a whole. You also probably need to understand the influx in terms of foreign arrivals for specific hotels. A large part of the industry, Neeraj Arkam, is still that it is largely unorganized even at this point of time. Largely unorganized, segregated. So I think a lot of these organized players will benefit going forward. But will the operating dynamics change? I think 70% utilization is a benchmark. What happens because of the strategic change that they've they've adopted in terms of an asset-light model will improve their ROCs going forward. And the third element obviously is going to be in terms of the average room rates itself. So when you're probably talking about the keys or the number of keys that they've got or rooms that they've already got and the average room per key, I think that should show signs of improvement as well, which will only happen as demand trickles in, both domestic and foreign as well. So yeah, I think sentimentally positive news. Does it reflect in terms of print and numbers? I think one will have to watch out.
Right. It's interesting that, just a few weeks ago, Neeraj and I, we were talking about hotels, and CLSA had actually done a channel check, and they were of the opinion that because of the fact that the hotel industry was reeling under pressure, they really didn't do anything to increase their capacity, which means that their supply is still low, and that leads for their ability, while the demand comes back, their ability to hike average daily room rates. And that, of course, is something that may very well play out in their favor as well.
In fact, also they've got competition in terms of Airbnb and the likes of that, right?
Aggregators,
So I think I had gone for a short vacation right now. I never really chose a hotel. So I think, and didn't go through an Airbnb, but I knew certain players which are probably getting into this space as well. And I think you're getting fabulous deals and fabulous properties as well.
Right.
So
that's very much. But Mayuresh, take a moment to thank you for joining in, and Happy New Year.
Thank you so much.
Happy New Year.
Thank you so much.
That's Mayuresh Joshi with his thoughts. Okay, final thoughts, top calls from our experts. Brijesh, to you first.
Apart from the two shorts which we have discussed, I would take a long on for intraday point of view, long on Indigo. If you look at the momentum, yesterday was a good upside momentum for last 2-3 days. I would look for 1345 buy, keeping an intraday target of 1372 and stop loss will be 1332.
Amit, 15 seconds to you, your top pick today.
I would suggest going short on HUL with a stop loss of 1975. The rationale is we think Nifty Consumption Index has now
come back to you, but here's how the markets are starting off. Flattish start to the trading day today, about 10 points lower for the Nifty 50, about 11 points lower for the Sensex, but it's a very flat start. The Nifty banked to just about 45 odd points, so no big shakes here on the large cap arena. What about the mid cap and the small cap indices? The last 3 days, they've outperformed the large caps, and in today's session, the small caps at least are starting off on a positive note, marginal at that, but marginally positive nevertheless. Let's see during the course of the day, do we see a pickup on those, and therefore, irrespective of what happens to the index, do we have positive market breadth? For the starters, on the Nifty, we don't have positive market breadth. So a lot of red, very little green. NTPC, Vedanta, Bharti, very muted gains for the index heavyweights. The top gainer is NTPC 0.4% or Vedanta 0.5%. Bharti Infra less than 0.5%. Then there's Nestle, Grasim. Bharti Airtel has quickly slipped out of the top 4 and just about 0.2% higher in trade. What about the losers then? Again, not too many losers. IT as a pocket seems to be doing slightly weak trades. So Tech Mahindra, Wipro, etc. are down. HDFC's got some losses to itself, but no, not much. There's just one name which is trading more than 1%, and that is on the downside, which is Tech Mahindra, down about 0.5%. The gainers are just up about 0.5%. So no big movements on the index stocks, not even in Reliance or Bharti Airtel, which are in news. So quiet as she goes for the large caps. Very quickly, a couple of stocks. Since I mentioned Reliance and Bharti, let's just see what the percentage gains are on both of those, or losses actually on both of those. Reliance flattish, Bharti bobbing between the red and the green. It's a very resilient stock of late. Let's see if during the course of the day it manages to pick up or no. Speaking of stocks which are picking up and trading near new highs, let's bring up some and see what they are doing in trade today. Inox Leisure starts off flattish today, as does Gujarat Fluoro. SL Propack, after having this big move and was up 5% in trade yesterday as well, up another 0.5%. So there are these few pockets maybe of strength, but the index largely fairly lackluster on open. Agam, what are you spotting?
Well, Neeraj, I'm sure you've already mentioned Chalet Hotels, but it is gaining with quite some momentum for now. So it is up as much as 8%, but we've seen Bharat Ventures building on the kind of gains that we saw yesterday, so that's also up and about. That's up around 5% for now. We have Adani Green Energy, and it seems like there's no stopping this one because it continues to gain. And it does seem like it may very well hit the upper circuit once again. It is up 4.5% certainly right now. We have gains in something like a Sterlite Technologies, which is up 2.5%, Kalpataru Power, which is up 2%. And on the losing end, we don't have at least momentum with respect to the big price movements, but ICRA is down around 3%. National Fertilizers is the other one, which is declining by around 2%. and well, Gayatri Projects is under a little bit of pressure. But if you leave that aside, once again, even though on the NSE 500 you have less, pardon me, you have less, well, gainers as compared to losers, the momentum in terms of advancers is a lot more. Neeraj.
Well, so interesting moves specifically on certain pockets, but at large, the markets are flattish to marginally lower in trade. But, well, we've had such a good last few days or few weeks that one shouldn't complain if we are ending the year with a bit of a whimper. The US markets too are showing signs of doing that. But what about the quick opening thoughts from our experts? Amit Harchekar, sorry, you were mentioning your idea and you were a short call on HUL. Is that your top call today? What's the rationale?
Yeah, the rationale is we think after the good pullback in Nifty Consumption Index, we think this entire structure has now evolved into an head and shoulder top. And in fact, the Nifty Consumption Index had retraced around 40% of the recent decline. So we think HUL should lead this decline from here on, although the stock has been consolidating since 18th of December. So we are recommending a stop loss of 1975 and we are looking for a target of 1854, which is around 200 yen.
Okay, and Brijesh, your thoughts for market opening today?
I think I will continue to go short on Bank Nifty even at 32,450 and look for around 31,840 on the downside.
Okay. Thanks a lot, gentlemen, and wish you both a very happy new year.
Happy New Year to you.
Thank you so much. Well, let's get in. Special market voice, Mihir Vora, Director and Chief Investment Officer at Max Life Insurance, joins us right now on the show. Mihir, good having you. Thanks so much for joining in. At the outset, can I ask you, a lot of people are starting to talk about, it's more a personal finance kind of a question, but a lot of people are talking about how a significant amount of money is moving into ULIPs and life insurance plans on the equity side and not so much on the MF side as well. Are you seeing that? Is more money starting to come into the life insurance space on the equity side and more money for you to therefore manage?
Well, it tends to be a steady business, the life insurance inflows. So I don't think I can say that we've seen some kind of a spike. Frankly, at Max Life, we always had a more balanced allocation from the traditional versus on the traditional funds versus the ULIPs. So typically, it's been a 60-40 traditional ULIP mix for us. So that continues. The growth rates, which probably spiked around 12 months back to almost 25-30%, probably that has come down a bit, but still is a healthy growth because for us the renewals business itself is such a large chunk. Then even if we don't sell new policies, the renewal premium is a significant chunk for us.
Okay. Having said that, so how do you believe you would want to deploy this sum of money in 2020? Would you stick to the tried and tested, or do you believe that 2020 will bring about some changes within your investment rationale or the spaces that you are looking at?
So broadly speaking, we invest as per the fund objective. So we have pure equity funds, balanced funds, and the pure debt funds. But probably a little bit of tweak in style, which has been forced, I would say, is the fact that you need to consider that liquidity is a bigger factor than it was ever before, especially the global liquidity. So some of the traditional parameters that we are looking at for valuations probably need to be tweaked a bit, and this premium for quality, large cap, etc., may continue as long as we continue to be dependent on global flows. For the value and the cheaper and the smaller stocks to go up, we need the domestic, broad basing of retail investors and the HNIs to come back in the market, which we haven't seen. So the Nifty is up 13% this year, but the mid cap and small cap indices are still down. So this polarization will continue till we are still dependent on global liquidity.
But let me come in on that, Mihir. What is the way forward? And perhaps if you have any sort of an outlook with respect to liquidity in the markets, because the RBI has already suggested that there has been a lot of moderation in liquidity.
Yes. So the good thing is that the RBI seems to be very serious about bringing rates down, the transmission mechanism to work better than it has in the last year. And this would typically impact the smaller companies a lot more. The interest component as a percentage of the PAT is very large for the mid-cap and small-cap companies. So if interest rates go down, this benefits them much more than the large companies. The large companies frankly have cash. They haven't been leveraging, at least, and they've been deleveraging the last 5 to 6 years. So there's no problem out there. The stress is really in the mid and small-cap and the SME, unorganized and organized sectors, which will be helping, which will be helped a lot by the RBI's move.
Okay, so Mihir, we move into another earnings season. Well, the first half has not exactly been stellar. What is your expectations, and based on how things are in terms of valuations, where is your allocation going towards?
So we are neutral on equities. Say 3 months back, we were kind of underweight on equities.
Okay.
But the fact that two events happened almost at the same time. One is that we got the corporate tax cuts on September 22nd.
Right.
And second is the Fed changed its stance from balance sheet contraction to balance sheet expansion. This happened roughly around the same time.
Right.
Because of that, we increased allocation to equities, and probably that's the stance going forward even now. Yeah.
Okay. Just wondering, the first 10 months of this calendar and the last two have been slightly different in that there has been arguably some bit of broadening of the rally from peak polarization of 64%. That too has come off within the Nifty 50.
Right.
But outside too, I mean, autos showed a bit of a bounce, metals started coming back. So we've seen some broadening.
Yes.
Would you believe that, I mean, it's difficult to take a call on which side of liquidity will support the market, but would you believe that by natural course, some of these broader market companies might start making a comeback, whether on the Nifty or whether on the top 100 or within the top 500?
Definitely, because you can't obviously have this kind of polarization forever. Something has to give, and it's either the mid caps and small caps have to start catching up, or the large caps have to correct. We hope the former is true, and we've seen a lot of pain. I think it's been almost 18 months of maybe around 20 months of pains for the mid and small caps, and we've seen an underperformance of almost 20 to 30%. The valuation premium that small and mid caps has started commanding has now come back to a valuation discount to the large caps. So pretty much that pain and correction and healing process is done. And now that we have a global liquidity very good supporting us, credit growth can't. I hope it can't get much worse than 6% or so. Yeah. It has to go up. So I think we have already formed a good low base to start off from. So there's pretty much nothing that can go wrong from here because we're already at a low base.
Okay. We have an interaction coming up with Abhishek Lodha, and I'm just wondering if those pockets which have done well, but the market is largely in its conversation ignored. Real estate, for example, and now I've spoken about this 6-7 times in the month of December itself, the kind of gains that the real estate index has shown. Do you like any of such pockets which you may have a contrarian view on? The market may not be fully in agreement, but you believe that there's fundamental reason to bet on these pockets?
The good or bad thing is that real estate or NBFCs, those segments, have in the last few months been painted all with the same brush.
Right.
So, but now in the last 2-3 months, we are beginning to realize that within those segments or sectors, the market is beginning to differentiate. So in NBFCs, you have NBFCs which have no problems in getting liabilities, which have no problems raising deposits or money from banks, etc. And they are now, I think, moving ahead, thrusting ahead. Similarly, in the real estate space, not all real estate companies are leveraged. Not all real estate companies are in stress. So the good branded players actually are seeing record sales. You've seen brands from Bombay, which were pretty much unknown in, say, Gurgaon, launching in Gurgaon and getting record subscriptions because the customer thinks that he's going to get his product in time at the quality that is promised. So I think within real estate or within NBFCs, the stressed sectors, the market is already beginning to differentiate.
Right. Well, I also want to quiz you a little on the RBI's financial stability report also suggested that household savings see substantial risk at this point in time. If you are suggesting that things may improve, then what are those factors that may lead to improvement in household savings, because they are naturally very important as far as investments in any area is concerned?
So essentially, we need to kickstart this job creation cycle, which has been elusive for so long.
Right.
And that cannot happen without private sector investments. The government has been spending on infrastructure, on roads, to the extent that they can. But the point is that not more than 20% of total investment in the country is created by the government.
Right.
80% is still the private sector, households as well as corporates, investing money either in physical assets like real estate or factories and buildings and all that is there for commercial. So to get the private sector cycle back in track is #1 priority.
Okay.
That creates jobs, and that will automatically raise the level of savings in the country. Right now, we run a trade deficit. Every time the government stimulates, the only part that gets stimulated is the consumption. And when we have increased consumption, we start importing stuff, and that's an unsustainable cycle.
Okay, so generally speaking, where does your preference lie between consumer discretionary and consumer staples right now?
As of now, the balance would be in favor of discretionary,
Okay.
especially the auto space, because again, we get high frequency numbers, and there is an indication that the rate of negative is already coming off.
Right.
So November, of course, was less negative than before. We had good Diwali sales, and the inventory clearing, the year change effect, etc., is kind of coming to an end. So we should see some pickup there in the two-wheelers as well as the four-wheeler space, the car space.
Do you think those benefits will percolate down to ancillary stroke financiers as well, or they will be the last port of call?
No, it should. They all move together. Ancillaries may actually be an even better case than the auto companies, because a lot of the ANCs are also global in nature. And we have seen even the global cycle pick up, especially the China angle and the US angle, which was kind of sluggish for quite some time, is actually beginning to see some traction. So some of the global auto ANCs, which have local and global presence, may actually do better than the local autos.
Okay. Mihir, before we let you go, one piece of advice for 2020.
Stay with the volatility. Volatility is here to stay. We have two big factors. One is global liquidity. Second is a beginning of coming out for India, the beginning of the cycle turning gradually probably. So it's going to be two forces acting against each other in the very short term, and that's going to create volatility. But I don't think the India's long-term story is gone. And so one must stick to their asset allocation to the extent they have committed to equities, and stick to it for the next year. Stick to the volatility. That's what I would say.
Okay. Well, bear the pain and continue to stay invested, I reckon. That should be the big takeaway there.
Yep. Thanks, Mihir, for joining in today, and wishing you and your team fabulous 2020.
Thank you so much, and wishing you and your viewers a very happy 2020.
Thank you so much.
Thank you.
That's an important market voice, Mihir Vora, talking about his thoughts on what to do in a scenario like this. Up next, though, we discuss the Lodha Group's debt reduction plans with Abhishek Lodha. Stay tuned.